Hello everyone, this is Dr. Amit Sinha. Welcome you all. Third session of portfolio management. Here I am going to discuss investment, its definition, characteristics, objectives, and alternatives. Learning objective of the sessions are to introduce the student about the investment, to evaluate investment objective, to discuss definition and concept of investment, types of investment, attributes of investments. Investment. The term investment refers to exchange of money wealth, saving, into the some tangible wealth that is asset. By investing, an investor commits the present funds to one or more assets to be held for some time in expectation of some future returns in terms of interest, dividend income, or appreciation in the price of the assets called capital gain. So, an investment is commitment of current funds in anticipation of receiving larger inflow of fund in the future. An investor hopes to be compensated for three components. First is foregoing present consumption, second, the effect of inflation, and the third, for the taking a certain degree of risk. There are three basic features which can be identified as common to all types of investment. First one is there is a commitment of present fund. Second, there is an expectation of some return or benefit from such commitment in future. And the third, there is always some risk involved in respect of return and the principal amount invested. Now, we're going to discuss the features, characteristics, or factors of a sound investment. When we say sound investment, means an investment which fulfill the objective or desire of investor. There are several features for which the investor should look into an investment while selecting a specific investment. So, first one is liquidity. Different types of investments offer varying degree of liquidity. An investor has to build a portfolio containing a good proportion of investment which have relatively higher degree of liquidity. Liquidity means availability of your money as and when it's required. So liquidity is one of the most crucial factor while you are choosing your investment alternative. Second is risk of an investment. It is another quality important factor that must be considered in the investment process. When we speak about the risk, so there are two types of risk. Safety of principal. Whatever the amount you have invested into certain asset, the principal amount should remain protected. The first one is about the safety of principal. Second one is to stability of return. The second, the biggest risk with the investment is the volatility of the return. If returns are not stable, then the investment is termed as a risky investment. Third one, which is important one, that is capital appreciation. Chances of capital appreciation or capital loss add to the risk of an investment. Some investments, such as land, building, equity shares, provide opportunities of capital appreciation. On the other hand, there are some investments, such as fixed deposit, debentures, so where the initial value and maturity value remain the same most of the time, where there are few exceptional cases in case of bond, where a bond get redeemed at premium. The next is tax aspect. Tax aspect is very important thing when you are going for the investment. The performance of any investment decision should be measured by its after tax rate of return. We have to check taxability, taxation provision at 3 point of time. at the time of investing whether we are getting any sort of deduction or exemption against the invested amount, and at the time of you when you are getting back your maturity amount, whether that amount is taxable. If taxable, what's the rate, then what is the net effective return, and if it is exempted, then what is the effective return. So taxation is one of the most crucial component while you're choosing an investment alternative. The next is investment horizon. Investment horizon means the time length for which you wanna invest. Just suppose that your time target time is 5 years, but you have chosen something investment alternative which will give you a good return only in 10 years. So then there is a mismatch. So while choosing the investment alternative, we have to look at the investment horizon as well. Investment objective. The primary objective of investment is maximize the return and minimize the risk. An investor's risk tolerance and time horizon are two major parts of determining an investment objective. Depending on the life stage and risk appetite of the investor, there are three main objectives of investment: safety, growth, or income. Investment alternative. Different investment alternatives are available. Non-marketable financial assets like post office, bank deposit, provident fund deposit. All the assets are having some their plus pros and some cons. Equity shares. Equity shares are one of the most risky asset, but further, equity shares may be classified into the blue chip company shares, growth shares, income shares, cyclic shares. These are the most risky shares, cyclic shares, and speculative shares. Bonds, government securities, saving bond, government agency securities, PSUs bond, debentures, preference shares. These are the safer side things. Money market instruments, so the short-term investment and a very low return as well. Treasury bill, commercial papers, certificate of deposits. Like mutual fund, the safe game, equity schemes, debt scheme, balanced scheme are available in the mutual fund as well. Life insurance, people look at as a investment alternative, but I will suggest that key insurance should be considered as a just as a risk instrument, not as an investment alternative. Real estate, agricultural land, semi-urban land, commercial property, which give you highest return, and precious object like gold and silver, precious stones, and the financial derivatives, so options and futures. So a lot of things we will discuss in detail in the coming lectures. So thank you. That's it for this session.